Good evening, all. Ira Epstein of Linn and Associates with your SPDR ETF wrap-up. And this wrap-up is for Monday, October 4th, 2021. Football night, right? Pretty soon it'll be baseball night, then hockey, basketball. It's a little bit of everything. I saw some of the best things I've seen today on TV. I just got to share it with you. I don't know if you know who Ken Griffin is. If you don't, he owns Citadel, founder, head guy. Lives in Chicago. I know a lot of people that know him. I've never had the pleasure of meeting him. But he spoke today at the Economic Forum of Chicago. He did it last time 8 years ago. You have to watch what he said. One of the highlights that I agree with, he said living in Chicago, and he lives here, New York, Miami, he's got homes everywhere, one of the richest men in the country. He said it's like living in Afghanistan. He's right. The governor doesn't know what he's doing. He's right. The mayor's useless. He's right. You can't have this much crime in a city this size, and everybody's got their heads turned, and everybody's trying to play all these politics, and at least somebody said it. When asked why his company is here, because that's logical, the next thing he said was, it is, but its days are numbered. They can't even attract people to Chicago because of the reputation of the city. I think it's true. I wake up every morning. That's it. We have an app called Citizens. I implore people to get this. If you can get to Chicago area, don't take my word for anything. Look at what the Citizens report on it. It beeps all day. A shooting here. Somebody's with a baseball bat hitting a person. Knife. These are the good areas of the city. I'm not even talking the dangerous areas. These are the good areas. At least somebody had the guts to say it. I feel bad for President Biden today, and these aren't monologues. I just wanted to start this. You can always drag forward. He had his press conference, blamed, of course, the Republicans for all the problems with the debt ceiling and all that's going on. I also agree with him, with the president. Why? What's wrong with McConnell? Pass a temporary debt ceiling bill. Either negotiate or don't, get it over the hump. You can do this in small increments. I don't know that we'll ever get to the point where the infrastructure bill will be signed that the Senate has already passed, nor do I think, in fact, I'm betting you'll never have a $3.5 billion, trillion, I keep saying billion, $trillion reconstruction bill. That isn't going to happen. This OCO over the weekend saying, well, we don't have to go for 10-year periods, we can go for 5. It's called nonsense, political nonsense, trying to skin the game, thinking that those of us that know finance don't know what she's trying to do. We did. We know how it's all accounted for in a 10-year plan, not a 5. The spending's there, and it's not going to get by. I hope I hope Joe Manchin and the lady from Arizona, I've got to remember her name. You know, she's doing a good job too. I think you got to get to something, if you're going to do anything, that's more palatable. Now, here's something that's palatable. I'm holding a live webinar this Wednesday. And I will open it at 12:15 p.m. for you to come in, get yourself situated. I start promptly at 12:30 p.m. and I end promptly 20 minutes later. That's it. So if you want to ask me questions on SPDRs, stocks, ETFs, I implore you, when you register my emails there, click on it, send me what you want me to cover. Let me explain the difference. There's only 40 or 50 futures contracts. That's it. There's thousands of stocks, SPDRs, and ETFs. You're going to ask me to do something, give me a chance to make the chart and get it up there for you. That's the whole thing. I say on each time, if you didn't get an email from me on the invite, what are you doing? The emails have already gone out. You take your cursor, I'm going to use my thing, you move it up. You'll say there's nothing there to move it to. Grab your cursor, move it. As you move up, you're going to see the icon appear. Every 10 seconds after it's up, YouTube takes it down. It's there. Just move your cursor. It will show. Okay? All right. So let's go to the charts, because that's what you really want. But it was such an exciting day, I can't get away from it. Microsoft, you still haven't filled this gap in the chart, but this is one of the more interesting chart patterns we've seen, period. Now, let me explain it. You're working your way down, I think you'd agree. Then you have an inside day, and all of a sudden, you have an outside day down. What's an outside day? You took out the prior day's high, low, you closed lower. Outside day down. The odds of taking out this high the next day or the day after are this. It could be done, but it's that. The next day it takes it out. When that occurs, I normally am looking for the market to fill the gap and ideally go to the 18-day average of closes. I haven't shown those yet. You'll see them in a minute. What rarely happens is you get an outside day down, then an outside day up. So the pros, typically on pullback, start buying the next day, figuring, you'll not take out that low. Boom. Go back on your charts. Show me how many of these you see. You'll be shocked. They're far and few between. That's the point I'm making. So you're in a churn area that's very difficult for even the pros to try to catch anything with. You got to put your swing lines back to these highs. Those are the ones that make sense. Lower highs, lower lows overall, still in a downtrend. I thought when you got up there, you were going to come up and fill into the 294.56, also filling this gap. I never counted on it dropping down today and doing what it did. Again, I think the pros went short again. It's crazy with the stop over that high. When I see this back and forth like that, why trade it? You don't have to. When we look at where the market might be headed, well, if it stays on the Bollinger Band and doesn't want to go up again, then the 100-day average of closes in green is the most logical number, very possibly the 200 if the stock markets were to fall apart because of no debt ceiling reached. I am hoping that the Republican Party goes and says, okay, basis this, we're not going to put America broke yet. Got my word. Keep it on the table. Let's go to December and see what you guys can come up with in between then, because we know the Republicans aren't going to vote for it. And without it, you can't get that debt ceiling. It's not a 50-50 vote broken by Ms. Harris in the Senate. If I'm correct, it's a 60 vote. You got to get 10 of the Republicans. That isn't going to happen. Lower highs, lower lows. Big support, though, in between these two numbers. That's what I'm looking for, the 100-day average in that. Then on Apple. I have been the pillar of the person when it came out, the product. I said, unless you're a camera or a battery freak, why are you getting this phone? And this is what it's basically done all the way through since the release time. That's what I thought. So now the question is what goes on here? It's not just the phone. It's other parts of Apple that people are questioning. But the techs got annihilated. Interest rates have been climbing. Interest rates higher are tech stocks' nightmare. They generally don't go hand in hand together. ARK, Ms. Woods just keeps getting runs on her funds. And as you can see, that's it. She dumped Tesla to buy Robinhood and some of the others, okay, but it hasn't given her the followers. That's my point. XLI, lower highs, lower lows into support. So oversold. First challenge again of the 200-day average. That's this light gray in the Bollinger Band. I think the professional money is out of the short side of this. XSD, the semiconductors. Well, I did not expect it to get this low, but I also haven't told anybody to buy it, so I feel very good about that. I like the semiconductors for the long term. You're not building more semiconductor factories that in the next 6 months are coming out and going to hurt the pricing power of this. You don't have enough of them, the semiconductors, to get the auto plants back to normal. Forget the word abbreviated production, normal. Then what about all the other semiconductors you need and everything, including phones? Big problems, yet the market coming down. Market seeing something else. Okay, so somewhere between there and there should be the low. Market is not a short sale in my opinion. Trend is certainly down. And I'm looking for support lower levels. I'd rather just keep hands in the pocket, walking with the bobbing head. I'll wait for my turn. Lower highs, lower lows, down to the lower Bollinger Band. Cover shorts is what I teach. This is a stock you can get high on. At least it's fun. It's cannabis. But down here, no, it's been a bear trend. I have been nothing but bearish for you on this THCX for a while. And you're oversold. Oversold to the Bollinger Band. Open your eyes up. You can always come back in at another price. That's what I tell people, if you haven't smoked that stuff. Otherwise, your eyes are closed. Lower highs, lower lows, riding the market down into the 200-day average. Are we going to embed, which means you converted to a very bearish posture? Both numbers were under 20 on the close, under 20 on Friday, and under 20 on Thursday. You're embedded. So if you get rallies, I would expect that shy of the, by the way, the 100-day average, you're going to see resistance. Something else happening here. Warning sign. What is going on here? You might get that 18-day average of closes under the 100. That's a bearish signal. If you break from here right now, the 200-day average is waiting for you. So I don't see that there's much here to be done except first selling the rally. And that's what I expect the pros to do. If they lose the embedded reading, they'll come out, but I doubt that they'll get super bullish on the market. This is a bad-looking chart on home building. In the energy sector, you don't need Ira to tell you that energy prices are running away with the production cuts via the green that we've all gone in North America, Europe, and other places. Who's left to produce oil? Well, the non-green, OPEC, Russia, and other countries. They'll get green, yeah, in time, but first we're going to make $80 a barrel. That's the game. And it's just a runaway. Now, what happens in a real cold winter? Whoa. Natural gas will go bananas this year. Crude will keep going. You're short already everything, and people will start worrying. I'll give you another one that I mentioned in the futures update. You're looking at this energy sector and crude oil specifically. How many of the airlines, when crude in America went negative for a one-week period, remember that? It went to negative $40. How many of the airlines, and I know they did, I won't mention them, said, we hedge, we're going to have to rethink and not do that program. That was negative $40. So they bought, they built it into their books. They're saying, oh, had we not hedged, look at how much better off we'd be. Now, let's flip-flop it, because this is inevitably what happens. There's nothing new with this. The market returns, gets over zero quickly. It's normal, back into the $30 range. They're not hedging. They've just been burned. Now they're $80. They're not hedging. Does that sound to you like sound business? The purpose of a hedge is to get your business in a position that you think is smart enough you can operate normally. No hedging and being at the market's mercy on wild swinging markets. You're going to hear the airlines are in trouble because of fuel prices. I'm praying some of the bright ones hedged. Lower highs, lower lows, oversold in the emerging markets, but they have no chance. High interest rates, high energy prices. Why do you want to own emerging markets right here? Gold. This is the first buy signal going home that we've seen in this market since back here at the beginning of September. So here we are about a month later. I think the pros went long on the close. I think their stop is under today's low. It's a risk. The low today was 163.47. So if they bought on the close, they're going to risk in the neighborhood of $2. And if they're right, that could be their upside target. We'll see if this plays out. But I think today's low for the next 2 days, that's going to be Tuesday and Wednesday, very, very important. Gold miners, still with the embedded reading, lose that. And then I think you're going back to the 18-day average of closes. I think the pros have sold this market here. I started telling people in my subscriber videos that you got to be careful. Okay, I have been on the bear side. Well, it's not hard to see that. And I've been warning them in those videos, be careful right here. This market could give you a pop in this. TLT, tell me all the resistance. 200-day average in gray. 100-day average, Bollinger Band. You don't see the battleground? The easy money fell out of bed. Why? Because the Fed said what? We are going to taper. And it could be November if the upcoming jobs data Friday looks okay. It doesn't have to be bullish. It just can't be a bad number. We'll find out during the week what a bad number is. So I think the smart money's coming out here, positioning themselves, wondering what is that number bad. They have another 4 days to see what the different trade firms come out with. FXE, which is the euro, down and away. My friend, I told you, just got back from his trip in Paris. He went on a barge for 2 weeks. He said it's eating in these fabulous restaurants with as strong as the dollar is. He said it's like years ago. And, it's not like he doesn't go all the time. He said, but it's like years ago. So I enjoyed hearing that. And, of course, everybody, who doesn't love when you go to Paris and you see things Christoph's sculpture was done? That had to be wonderful to see all that. So when you put it all together, my friends, I want to see you on Wednesday. Remember, I've sent out the invite. If you didn't get it, look in your spam. If you didn't get it there, it's simple. Grab your cursor, push it up with the pointer. It'll pop out there. Click on it, fill out the form. You're there, and I'll see you at 12:15. Have a great day. Wednesday.